Netflix is down 14.5% in the last month, which means if you bought $1,000 worth 1 month ago, you'd have $850, $860 right now. Should you go panic and buy more? Well, remember, we do not believe in any panic buying or selling. What we're going to do is Uncle Paul and your friend Mo going to analyze the company and decide what is the value of the company. Let's go check it out. So we're here on pulling up Netflix, and let's go over some high-level metrics for the company to start. The market cap of the business is $170 billion, more or less. If you wanted to buy every share outstanding, you're going to spend $170 billion. In the last year, they made $4.25 billion, and they matched that with $4.26 billion of free cash flow. Mo.
Surprising.
Exactly. Why? Because look at the 5-year net income, $3.5 billion, and the 5-year free cash flow only $340 million.
Oh, what the heck happened?
This is one of the issues I had with Netflix all along. If you go look at our past videos, I sat there and said, wait a second, their free cash flow isn't matching up with their net income. And I knew there was probably an explanation for it or fraud. I mean, there's either a really good explanation or it's an indication of fraud, like with Enron and other companies like that.
Their free cash flow is insane. Just go look at the last decade here.
Okay, let's go.
I mean, it is.
Why don't you pull up, Mo? Why don't you pull it up?
Okay, so it's right here. 34 million, that's in 2014. Negative 543 million, negative a billion, negative 2 billion, negative 2 billion, negative 3 billion, negative a billion, 1.4 billion, 160 million, 4.26 billion.
All right, so 3 years in a row of positive cash flow.
That's true. It's just, man.
Now remember, guys, it doesn't mean you go out and buy the company just because of that.
No.
The current PE is 40. Okay? That's high-ish, but we don't know. What was that?
Lower than I expected.
Way lower than I expected. Yeah. I expected a much higher PE than this. So I'm glad to see that right there. No dividend, of course. Bottom line profit margin, 13%, give or take. Now, their free cash flow, guys, again, the last 5-year average is really, really low. So, okay, you have to sit there and factor that in. Mm-hmm. Return on invested capital, about 11%. Not great, but above the market average.
Not bad.
This shows that this company gets a decent return on the money that's invested in the business, but it is a growing business still. As much as people don't want to agree with that, it is true. Go ahead.
Not bad for a growing business.
Yeah.
Really.
By the way, I watched a show in the last week from Netflix that was out like 2 years ago, Behind Her Eyes. Have you seen this?
Never heard of it.
It's got Bono's daughter as the main character. She's a very cute girl.
Is it good?
It is good.
Should I watch it?
It's only 6 episodes, and I really enjoyed it. I would watch it if I were you.
Behind Her Eyes.
Behind Her Eyes. It's Bono's. Do you know who Bono is?
A singer.
Yes. Yeah. A singer. Yes. I'm sorry he doesn't have a guitar and talk about pickup trucks and having sex with his kids.
And red dirt roads.
Red dirt roads. All right. So
having sex with his kids.
Let's look up the 8 pillars on Netflix. Guys, remember, if you're part of our community, you can customize these 8 pillars, up to 12 different pillars of your own. All right, so we've got a slight increase in shares outstanding, nothing major. I don't really blame them for that.
Me either.
Their 5-year free cash flow is so low that their debt looks really high because of it. So this doesn't bother me either. Their total debt, let's say, the $350 million in 5-year free cash flow times 56 is what? What is that? 18 billion or so, roughly. So if you take their last year free cash flow, then you're okay, 4.3 billion. So I'm not looking at the debt going, if they can continue on with this free cash flow, that's the big key for Netflix. That's the big key to me. If this free cash flow can stay at this level and go higher, I'm happy with this. And then at that point, you cut off the shares increasing, and all of a sudden you're just waiting for the price to fall.
And I just looked at the income statement.
Yeah.
They are slowly starting to buy back shares.
Why?
I don't know, but they're slowly doing it. I don't know why.
Why are they buying back shares?
I don't know why.
Guys, if you're new to the channel, I want you to remember, we're not big believers in buying back expensive shares. Now, I want this to be a lesson for people, though.
Go and find out if they have.
Let's go look at their chart over 10 years. All-time high of $700 on November 17th, 2021. 2 years ago, all-time high of $700. It fell all the way to a low of 164. 162.71 was the low for the company. Now, when a company is growing like crazy, people pay a ton. This is when growth started to slow and there were issues there. Guys, Don't assume that just because a company is growing like crazy, that growth is going to continue, because it won't. And don't go pay through the nose for it. That's why on this channel, we're trying to teach that process of how to evaluate the company. So let's go over some news and some bull and bear cases from our community on Netflix. Go ahead, Mo.
One more quick thing. So in 2021, they did put forth a $5 billion share repurchase program
With no expiration date.
date. So that's that.
Awesome. All right, so what's some news on the company?
Okay, so Netflix just got more expensive. If you noticed, do you have Netflix?
Yeah.
Yeah, you do. You just said you had it. They increased prices recently. So this is the second increase in 2023, I believe.
Yeah, but I'm not the person that's, like, to me, I belong to every service out there, basically, because I look at it as, on all the services combined, I spend less than $100 a month, and I used to pay $150 for cable. So I just look at it as, I save $50 a month, and I get every streaming service.
Here's your price increases. Actually, $20 a month for 4K and 4 screens. That seems pretty good to me.
Yeah.
I don't see any issue with that one. Okay.
And you're on the 10K there. That's awesome.
Yeah, exactly.
All right.
Now, next one. AI this week. Here we go. The Hollywood writers' strike may have ended, but the battle over AI is far from finished. Let's see what's going on here. They rolled out big updates to ChatGPT. Where's the Netflix part?
Where is the Netflix part? Guys, this whole writer's strike was causing a problem for creation of shows, creation of movies, etc.
Yeah, so really it's just talking about how it could affect Netflix as a whole, looped in every other company in there. And it's a temporary thing. I'm not worried about it. Are you?
Well, I mean, it's done now. Yeah, I never worry about
honestly,
these things at all.
Somebody did make a very good point the other day. They were saying like AI can create movies at some point.
Yeah. Well, I said about actors. I said that about actors a while ago.
Yeah.
Remember Tim going like, "Oh my God, you're right." I'm like, listen.
And they can make the actor look however they want.
Yeah.
Yeah.
In that time frame, isn't that incredible?
Mm-hmm. One more thing. Did you watch Beckham, the David Beckham?
No, I haven't watched. All I saw was the part I loved on Instagram when Victoria Beckham's getting interviewed, and she says like, "Oh, I came from a working class family," and David Beckham opens the door and goes, "No,
tell the truth.
Tell the truth." She goes, "No, we did." He's like, "No, tell the truth." He goes, "No, I was working class family." He's like, "Tell everybody what car your dad drove you to school in." She goes, "Well, it's complicated. It's a long story." "No, tell her what car." "Well, in the 80s, my dad had a Rolls Royce." And by the way,
Beckham just walks out of the room.
I love it because there's a businessman in town. I won't say his name, but Mo saw me write it in the Instagram chat. He always tells people he started from nothing and he worked his way to the top. He inherited a business that was generating $300 million a year in revenue, and over his 20 years grew it to $500 million, which is still big growth. But to say that he came from nothing was exactly the same thing as Victoria Beckham.
Yeah.
Like, you don't see me sitting there saying I came from nothing. I'm like, no, I got a huge leg up in life, but my goal is to round the bases as many times as I possibly can.
So I will say, I watched the whole thing Saturday night. It's 5 episodes. It was phenomenal.
About Beckham?
Yeah. It
Really?
was so good. It was really good.
Really?
Yeah. You got to watch
Awesome.
it.
All right.
All
I'll
right.
watch it. Okay. So, bull and bear cases in our community. So, we're going to pull up our community chat and we're going to pull up Netflix stock.
All right.
Mo, let me go over some of these. Oh,
All right.
Awesome.
XILP value.
he, by the way, very appreciative
Very
guy.
active.
Loves the fact that we talk about this, and he has that Martin Scorsese. I don't know. Go ahead.
Scarelli. Netflix is the leading streaming service in the world with over 220 million subscribers. Recurring revenue. Good point. They've made a strong moat and track record. That's absolutely true. Netflix is expanding into new markets such as gaming and live TV. I actually got on my phone. I logged in and it gave me the option to game.
Really?
Yeah, I didn't try it, but gave me the option to do it. So that's pretty cool. They're planning to launch an ad-supported subscription tier. Have they done that yet? I don't know. I thought they did.
I still get upset when I pay for something and I have ads. If I don't have the option of buying the no ad version, I just want no ads. And for a guy like me, this is my personal opinion, I would rather just pay a few extra bucks a month for every single. If I have 10 streaming services and they all wanted $4 more per month, so I don't have ads, I will gladly pay it.
So it's going to be four minutes per hour of ads that is going to come through on Netflix.
So
I
typically,
think it's $10 a month.
back in the day, a 30-minute show would have 22 minutes of actual show, 8-minute of ads. So in an hour, it'd be 16 minutes. So it's still 1/4 the amount of ads that a typical show had back in the 90s and early 2000s when you used to watch normal TV.
Yeah. All right, a couple of bear cases here. Netflix is facing increasing competition from other streaming services such as Disney Plus, HBO Max, Amazon Prime. Netflix subscriber growth has slowed in recent quarters. Oh, I just got an Ulta price alert.
Oh, you did?
Uh-huh.
385. Oh boy.
Netflix content costs are rising at much higher rates than revenue.
Oh boy.
Impressively, compounded annual growth between 2010 and 2020 was 20.7%. Now, can they continue that in the future? People don't think they can sustain that in the future. Probably going to drop significally as costs of goods.
Netflix just shipped out their last DVD like last week.
I know, I saw.
Did you see that?
Yeah. I
That's
remember do you remember the show Rescue Me? It was about the New York Fire Department with Dennis Leary.
Oh, Dennis Leary is a funny actor, by the way.
Yeah. So before streaming came on the phone and everything, I like every 2 days I would send them back.
See, I never did the DVD.
Yeah.
No, I never did the DVD.
I always loved opening those things. It was the paper with like the really thick, like ripped. Oh, it was great. I just loved it.
Listen, when it comes to Netflix,
Tim's laughing.
Streaming has been a big thing for a lot of companies. I've said for a while there's going to be some sort of consolidation. I believe in streaming. Is that true? I don't know, but I look at it going, man, is it possible that there's so many streaming services? Maybe. I think Netflix, I look at Amazon Prime and I just chuckle. So it's amazing to me that Amazon owns the market of everything, but I look at their Prime as kind of like,
joke.
Yeah, it's a joke.
It's a total joke.
I think it is. Now, I watch Thursday Night Football on Amazon Prime and things like that, but I never go to Amazon Prime for anything having to do with watching a show, unless I know the show's only on there.
Mm-hmm. I watched the Travis and Jason Kelce show on there.
Oh, it's on there?
Yeah, it's pretty good.
When did you start watching that? After T Swift started dating him?
No, prior to T Swift, actually.
Really? Because he's a Cleveland Heights guy?
Yeah, that's why. He wears a lot of Cleveland Heights gear.
Yeah, he does.
I like Travis Kelce.
Yeah, so do I. All right.
He's going to get his heart ripped out.
Keep going.
At least he'll get a song about him, though.
That's true.
All right. Let's see what Dalton has to say.
Wicked
here.
Willie.
Yep. Penetration rate in the North American market is estimated to grow to 62% by 2025.
Wow.
That's a pretty big number, especially with all the competition. From May of 2021 to June of 2023, Netflix added 2.2% of market share on the U.S. TV screen time, jumping from 6% to 8.2%, behind only YouTube with 8.8%.
Oh wow! I would actually be surprised. I was actually surprised by that. If you told me how much, who was leading by a lot, I would have said YouTube by a ton.
Because YouTube is so vast. It's not just entertainment.
Yeah, and they're shorter
learning
videos.
and shorter videos. Yeah. All right. Bear cases. According to a survey from 99 firms, 41% of Netflix users are not paying for the service, while 52% are sharing passwords.
Yeah, but they're cracking down on that now. Like
Big
I just
time.
got the other day, I went to Netflix and it said, "Hey, do you want to add some family members to your plan or something like that?"
To me, it's actually quite annoying because I have more than 4 televisions, so I go to log into different TVs or I log into my computer or whatever, and I have to like re-verify because I'm over the limit. So they're really cracking down on password sharing, and I get it. I mean, it's annoying.
Well, look at our software here.
Yeah.
We do password. We have to.
I totally get it. Increased pricing for all of its tiers of its platform, $8.99 to $9.99 for a basic tier. Okay, well,
by the way,
again, I don't think it's that big of a deal.
4K. I was just texting with Matt, our friend, right? Because I was watching the Vikings game last night, and I'm like, "Do you remember what he did? You probably don't remember. Do you remember watching football games in the '90s, even early 2000s?
No.
It was so grainy,
So bad.
and now it's like literally, it's like you can see it's absolutely incredible how, like, to me, that quality is worth it. And 8K is coming out. You know what I mean? There's doing more in 8K.
4K is like almost a thing of the past at
Yeah,
this point.
exactly.
Yeah.
4K is almost a thing of the past.
So 8K will be $25 a month, and people will complain even more, even though
Listen,
they're getting something for it.
You know, it's funny. I always joke with people. I say, listen, you go to a restaurant or bar, you order a $27 drink, and then you complain when Netflix goes from $12 to $13 a month, and it provides endless. You know, the biggest issue I have with Netflix is Lisa telling me, would you pick a show already? Would you pick a movie already? That's it.
There's certain things that when people complain about, I get annoyed about, and Netflix subscription is one of them. The other one is an iPhone. It drives me freaking crazy.
What do you mean?
This is the best deal ever for $1,200. You have it on you at all times. It does everything
all
you need to do.
All you did for the 15 was get a new charging port.
Any iPhone. Any iPhone.
All you did was get a new charging port.
I know, but yours was $1,200.
Yeah, I know.
It was a great deal.
Well, yeah, I'm on my phone a lot, and
Exactly.
I get it.
Yeah.
I understand that, but it still annoyed me.
Well, you're the problem.
All right,
Let's see
so
what
let's
the
go back to
analysts have to
let's
say.
go back to the company. Let's check out analyst estimates. Is that what you said?
Yeah.
All right, what do we got
Whoa.
here? Oh my gosh, doubling their profit per share in the next 4 years.
Jeez. That's
You know,
big.
Gianni in our community, he's always like, Paul, I think you're wrong on Netflix.
Yeah. He said this is going to be a 100-bagger.
100-bagger?
That's what he said.
He said 100-bagger.
100-bagger.
Guys, for those who don't know what a 100-bagger is, it's a company basically where you make the stock goes up 100 times.
So they're just getting started.
Wow.
Mm-hmm.
It's quite the statement. Revenue, 34 billion to 50 billion. That's about a 50% increase. Profit doubling. All right.
Solid. If true, solid.
All right. So what's our final question, Mo?
What do we pay?
What do we pay for the company? That's why I use a stock analyzer tool. Now, guys, you've watched our videos. I talk about the community a ton. I talk about the software a ton, which is included when you get the community. Now, I'm not asking you to make a yes or no decision right here, right now. What I'm asking you to do is to make an informed decision. And you cannot possibly make a fully informed decision on the outside. You got to be inside. You got to be using the software. You got to be in here, touching it, feeling it, just like if you wanted to buy a new car, you take it for a 15-minute test drive. But here, I'm giving you a full access, full test drive for 7 days. Use the software, come into the community, say hi to me in the general chat, come use it, get your hands dirty, get your hands in there. And I'm very confident at the end of 7 days, at any point in between, you'll find the value in the software and you'll sign up for the year. So guys, go to everythingmoney.com, sign up for the software, full access for free for 7 days. Now, when was the last time you did Netflix stock in your stock analyzer tool, Mo?
Mine was July 19th.
Mine was May 22nd.
Okay.
So let's pull our assumptions up.
I'm not going to change anything yet. I'm going to see what I put in here first. Okay.
So
I hate it.
here's good news. ROIC is increasing.
Yeah, for sure.
Okay. 1 year is down.
Yeah.
Revenue growth.
Revenue growth is down that 1 year too, though.
True. I did 3, 6, and 9%. What did you do?
I did 6, 10, and 14.
Oh, wow.
Yeah.
But Mo,
Getting into gaming.
that's true.
If they do start getting into AI movies and not having to pay actors, actresses,
See, I think there's going to be a big
a revolt.
Yeah, I think there's going to be a big Screen Actors Guild. There's going to be some sort of condition saying,
Maybe there's an actor with a AI, and then they have to pay. Maybe it's half.
yeah, something.
I don't know.
All right, profit margin. What do you have?
I did 10, 12 and a half, and 15.
See, I did 11, 13, 15.
Okay.
Free cash flow.
I did 8, 11, and 14.
I did 9, 12, and 15. Now, here's the good news. That gives me hope right there. The fact that free cash flow and profit margin last year were exactly the same.
Yeah.
Big time hope there. So I want to make sure that this is a thing for the future, that they're consistently going to be making the same free cash flow as profit. That's what I'm hoping for. Now, for PE at the end of 10 years, Mo, what do you have?
I did 16, 19, and 22.
I did 15, 17, and 19.
And I agree with that because remember, my revenue that I put in was 14%. So if they can do that, yeah, they're going to remain the industry leader, I think.
Okay. Now, what'd you put for desired annual return?
11, 13, and 15.
So I went higher on this one. I did 12, 13 and a half, and 15%. Now, guys, for those of you who are wondering what this means, this is basically my margin of safety. Since the market does 9 to 10% on average, so from here, I have to sit there and say, okay, if I want to own this company, what am I willing to accept for return? The lower your assumptions, the lower your margin of your desired return can be. The higher your assumptions, you need more margin of safety. You need a higher return to buy that company.
Mm-hmm.
Is 12 too high on the low side, Mo? That's my question.
I don't know. Is it too? Maybe for the revenue growth. I mean, that's low.
All right, I'm going to switch this up. I'm going to go 11.
Do you think that their profit margin will increase
12
over
and a
the next
half
decade?
and 14.
Because they've done 11% for the last decade. And you have in there on the low 11%.
Yeah, but you remember me, I look at the profit margin and I look at free cash flow and go, if these things don't match, I'm like,
You're
that's
out
why I was so,
anyways.
by the way, that's a big reason I was so negative on the stock and putting a high margin of safety. But now I see a glimmer of hope right here.
Yeah.
So the information has changed, so my assumptions change.
Yeah.
That's what you guys got to remember. You should change your views as the information changes. But the information has to be material changes.
Right.
This is material. This goes, oh, wait a second. My number one concern before was that free cash flow and profit were very, very different. That was a big red flag for me. Now, boom, it's the same.
Let's see.
I like that.
Let's see what we pay.
All right, so I'm doing 11, 12 and a half, and 14. Hit the analyze button. Now remember, guys, just need you for about a minute longer. Nothing major. Let's go check this out. The stock's currently at 382.
Yeah.
A low price of 85 to 105, a high price of 206, and a middle price of 140 to 150. So for me, it's just looking like it's too far away. Mo, what about you?
I have 100 to 120 on the low, 286 to 307 on the high, 175 to 200 in the middle. My watch list price is 250 for puts.
Guys, for me, this is why we do this. It allows me to sit there and say, okay, next company, let me go find a better company as I wait for this company to fall. Thank you very much for your time. Everythingmoney.com. Sign up 7 days for free.